Are we ready to go?
Yeah, I'm recording. You can go ahead.
Okay. And good morning, everybody. This is the second part of today's Synergy webinars. And my name is Michael Filighera. I am the proprietor, owner, chief cook and bottle washer for LogicalSignals.com. And a little bit about my background is that I have been trading the markets for over 40 years. I began as a market maker on the Pacific Options Exchange in 1979. And I have traded options here on the Pacific Coast. I have traded in London on the London Traded Options Market. I've traded in Amsterdam on the European Options Exchange, also on the DTB, which is the German bourse. And that is where I started to learn about electronic trading. I came back to the US in 1997 and again went down to the Pacific Exchange. But I noticed that there seemed to be a turn from pit trading to electronic trading. And of course, that is the direction that the markets went. So I switched and sold all my seats on the floor, came home to my office and started to trade from home. One thing that I did notice though, more recently, probably within the last 7 years, is that volatility started to switch and move more towards the futures. And so I decided that I would move also to the futures and work on being a day trader. And so what I want to talk about today is it's not necessarily an easy decision, nor is it an easy thing to do. It may sound easy. You may get a lot of emails about people talking about the brass ring or the gold ring or their system works or my system is the best. And I think that that is not necessarily the truth. It can be very difficult to day trade. Without the proper tools, without the proper knowledge, or just a trade plan, let's say, it could be a very difficult thing to do. So if your decision is that you want to become a day trader, then my suggestion would be that you have to treat it as a business. People that are professional traders, it's because that's their business. That's their sole source of income, possibly. And when you make that decision, like anytime you start a new business, you should have a business plan. If you have a business plan, then you need to revise it if necessary, but you need to stick to it. And then breaking that down, each day you come in, you really need to have some kind of a day trading plan or a plan to trade on that day. So there are a lot of products that we can trade. You can day trade stocks. I prefer to trade the indexes, which is going to take a larger view of market activity, which will include all of the individual stocks that might be in an index. And then you're going to get a little bit broader picture of like what the whole broader market is doing. Now, also, when you choose your product, say, for example, what I have right now showing is the Nasdaq future, which is based on the NDX, which is 100 stocks. Amongst them, of course, are Apple, Amazon, Tesla, Facebook, Chipotle Grill, a lot of the Google, a lot of our big stocks. Now, the volatility in the Nasdaq or in the indexes has increased substantially due to just the intraday moves, to what's happening in some of the individual stocks. Now, you might see the VIX tick up, tick down, and that, of course, is also going to have an effect on our volatility for the Nasdaq or the S&P or the Dow or gold, etc. And it's important to kind of keep an eye on that, but it's also more important because it's going to help you determine what's happening in these types of moves. Let's go over and take a look at the Dow right now. And okay, hold on 1 second. I've got to put my chat box up so I can see what you guys are maybe asking me. And it's not.
Oh, it was just me talking with some of the live viewers.
I can't hear you, David.
Oh, it was just me talking with one of the live viewers, so no questions yet. So.
Okay, thanks. I have to turn a few things off because, to tell you the truth, what you just saw on my screen, I can't necessarily talk about. Those are proprietary indicators, and I have made basically an NDA that says they're proprietary, I can't discuss them. But now let's just take a look at the Dow. And this is basically 30 stocks. And now we're going to start with basically a clean chart. The cloud that you see is basically a volume indicator and also levels of where stocks or this index may reach or not. But each day that I come in, I choose the instruments that I'm going to choose or trade that day. My favorites are the Nasdaq and gold. And I love gold. I've been a gold bug for years and years. And what I attempt to do and what I use when I trade gold are Elliott wave and Fibonacci numbers. Now, the Elliott wave patterns are sometimes skewed when we're dealing with an index, such as here in the Nasdaq. You can see I have this on a 5-minute chart. It still follows good Elliott, but things can get extended and things can move outside of limitations that would either expand your count or negate your count. But that just happens to be the beast, and that beast is called the Nasdaq. Over in gold, it tends to follow cleaner patterns. And what you can kind of see from how I've got this set up is that I was basically looking for this rally right here that has now taken place. So I would then go back and decide that I'm going to try to capture, because what I'm going to try to do here, folks, is set up some trades for you. But let me back up before we start to do that. And I just want to finish my thought process. If you're going to start a business, you have to have a business plan. Once you have your business plan in place, then you need to have a trading plan for each day. So as you come in, you're looking at what has happened previously in the overnight session, maybe what's happening a little bit longer term. And that can be something that is very, very important. I'm going to switch over to gold again and show you on this additional chart. And let's go up to a 30-minute chart. Now we get a bigger picture of what basically has been happening overnight and then in our session today. Our session today has actually been quite limited. But when we take it into the longer picture, we can see that it's likely that the market may come back down again. And so this is just a corrective bounce, and it could be over right now. And this again is based on the 30-minute chart. So I can start to put together some Fibonacci's, and I'm going to go up one more so I can include the high. That's the high I want. I'm going to look here. Now I'm going to run just some basic Fibonacci extensions on this. And again, what I'm trying to do is I'm setting up my look for today. Now here's the low, and now you can see that what we have. And basically what this pullback or the bounce higher, it's really getting stuck right here at a Fibonacci 0.236 level, or 23.6%. That comes in at 1951. And we can see that the market poked its nose above it 3 times, couldn't hold, came back down, and now is continuing to go down. So now I come from that chart, I'm going to come over to a lesser chart if we start to bring this down, because we're developing our picture. We're developing where we think this market can go. I'm going to drop back down to a 15-minute chart. Here are our Fibonacci levels from the hourly chart. And now we're going to bring it down to fit into our picture for today. Now I could come back and I'm going to run some Fibonacci extensions. I'm going to go from here to here to here, because I want to have an idea how high this could come. Now I know if it's corrective, it should not break above this level. And you can see right now it basically has. Now, where do we want to start to sell it? This would have been my first point right here, 1951.80-ish. Now you see it's kind of trying to hold what should be support at the 618 level, again, Fibonacci numbers, and it basically is holding, but eventually I would expect that this market is going to drop back down and produce a new low below 46. That being the case, now I want to draw some extensions on this one, which should basically be the same here to here. And you see again, here's that 236. So here it's a little bit different because I was going in the other direction, but now I've got a different look at this. It's holding here instead of, we would expect that this is going to start taking us higher. Now, so what would I want to do? I'm either going to try to wait to see if it's there, or if I'm late, I'm going to come in and sell it. See if I can get, I did. All right, so now we're in, but we're really going to use this 49 as our stop level, basically. And because if it starts to push too far above here, this is definitely where you'd want to stop the trade. You're going to want to get out. Now, I know that we're in a live market, so I'm going a little bit faster. So I'm trying to show you real time how day trading things can work out. And if we were in a static market and it really wasn't moving around, I would take much more time to discuss some different things. Now, again, before you start trading, always have in mind, what is your objective per trade? So what we need to factor into this is we need to have a risk reward. If I'm looking to make at least $100 or $200 on this trade, then I can't risk more than 100, because basically I'm now taking my risk reward ratio and skewing it in the wrong direction. So if I'm willing to risk probably $200, then what I want to make is 400. So if I'm going to put my stop there, which it did, and I'm going to close that trade and look to see what happened. Now it came up and it held that resistance, but I would have had to stop there. So I'm going to re-enter this trade and see if I don't get the move that I was initially looking for. But again, since I was risking 200, I need to now make 400. And you can, if this thing comes down and puts in a new low, which I would basically expect out of this move, then my risk reward is in line. Again, I'm going to use this particular stop right here. But if it breaks that stop, basically what I want to do is reverse, because that's going to tell me that this market should start to head back up. Now, people say, do you want to work with the trailing stop? Yeah, you can. For sure you can. You can begin to protect profits, but you're going to have to try to keep yourself out of the way, because if volatility is going to push this, which in gold it actually does quite frequently and quite quickly. You'll see where this thing touched 50.80 and it's already dropped $1.40, and now look at it, it's right back up. So you're going to see how quickly these markets can move, and then you're going to determine, is this enough? Can you stomach those types of moves? So in order to do this, you have to now adjust your risk reward parameters. If you're working with real tight parameters, you're going to constantly get stopped out. Or if you're really looking to scalp, you still have to use those good risk reward parameters, but you're going to have to shorten them. If you're only looking to make $100 on the trade, you can't risk more than 50, because you basically want to keep it at a 2-to-1. A 1-to-1 does work, but you're going to have to be real strict on it. So, which means you can't let it go against you very far, because you're not looking to make that much money. So I'm hoping that you can see this a little bit about how important a risk reward ratio in day trading is, very, very important. You must have it. Now, moving back. So again, these Fibonacci numbers are going to change constantly because you're constantly resetting them to fit the move that you're on. My longer term, they stay in place right now until that picture, so it's a 15-minute chart. When that picture changes, then I'm going to have to change my Fibonacci levels, and so I'll change where I come in and out. Now I'm on, you can see my trading screen is a 500 tick chart. It shows me the moves much cleaner, and it allows for easier entry and exits because you're going to see the move. Right now you can see this is not really hanging tight, and there we go. And I'm going to reverse and see if I can't capture some of this additional upside, because basically now what I'm saying is that's a complete move and we should continue higher. Again, I need to work on some pretty tight parameters. Now, when you're learning to do this, and before you would start trading a live account, you need to do it in sim so that you can watch the moves, you can work in and out of a trade, you can add to a trade, you can, take your profits when you need to. But if you're working in a live account, you're going to get caught up in your P&L versus working the trade. So once this thing really starts to move above 52, let's say on this particular trade, I want to start protecting. You want to start protecting some profit. I don't necessarily like to give back what I can earn once it's up at a level that I feel I need to start protecting so that I'm not just waiting for this thing to run all the way up to 54 or 56, which I believe it can, and see where we go. Like for right now, I really, if it comes down too low, you're going to want to reverse again. So I'm going to see like it's doing right now. This is how gold trades. So it's very quick. I'm going to show you this example, and then we're going to skip and we're going to move over to the Nasdaq, which is also a very, very fast moving market. So getting back to becoming a day trader while we wait for this trade to kind of come in a little bit and see what's up next. When you decide that you're going to be a day trader, you must choose your product. You have to choose a product that you're going to be able to really trade comfortably. There are many different things. Okay, so now we see where this is moving. It can go very, very quickly, but I want to put a stop there. I'm going to protect $100. And as this moves up, I'll continue to protect my profit. So you're going to want to really work on knowing the product you trade. What makes it tick? What makes it go up? What makes it go down? On a product like gold, the gold market hates uncertainty. So we have to think, are we in a period of uncertainty? Oh my, we are. Now, the one thing that gold will do, it will follow Elliott fairly cleanly. So off of that high, if you were watching Jim's presentation, he kind of was talking about gold, and he talked about a short that was at 2010. That was a good place to short because the market was likely going to start to pull back. I'm going to tell you, I'm going to move this stop up. Now I want to protect $200. And I might get stopped out, but if not, then it's going to just continue to go up, which hopefully it is. Yeah, we'll see. Back to that presentation. The market, gold does need to pull back. And it's been in a little bit larger pullback. Okay, so we're out. We're up 100 because we would be up more than that, but I took some hits down here. And now we're just going to wait, watch the market, and see where we could go next. Back to my thought. When you are day trading gold traders and people that are in gold hate uncertainty. We are in what I determined or call a gigantic bubble of uncertainty. The political situation in the United States, uncertain. The economy, uncertain. The markets, crazy. The markets are insane. Why? Because we have so many stocks in the Nasdaq. Let's go over and take a look at the Nasdaq. We have so many stocks in the Nasdaq that are literally just going crazy. They're going to the moon. And so it's kind of almost, when you think about it, going contra to what reality tells us. But that doesn't necessarily always mean anything. I'm going to show you about a setup that I see here. Now, we almost got back to 11,400. Pretty strong considering that this market was, this market was like very, looking like it was just going to sink like a stone. Okay, so there's one. I think that's over. And if this is the case, I'm going to tell you, I want to sell it. And it may not be. So, and now what else I'm using is right here, I have a stochastic, but this isn't a 500 tick. Stochastic up here on my 15 minutes, kind of showing that it's overbought. But on a 5 minute, it's not looking that bad. It's looking like it has more upside room. See, it's heading lower, but it can turn against these deltas and start to head higher. I'm not sure, but I think it kind of can come down. So I'm going to enter in, if I can get it. Let's see if we get in. Now, in the Nasdaq, again, you're going to have to work. Okay, so now I'm in at 383.25. Nasdaq is $5 a tick. So you're going to see how fast, if they really start to take this market, how fast this thing can go against you. And it also, conversely, if it hits some sellers walk in, it can go in your favor very quickly. So I see that it's just kind of moving. Sometimes you can use like a 21 tick, which is about $100. And this, if you're looking for two, I think that's a good point. Sometimes, depending on what I feel or how strongly I feel, I may add at that point and work a two lot. Again, risk reward, also contract position sizing is going to depend on what you're starting with. As a day trader, I have to be honest, and I must say that don't trade money you're not willing to lose. You have to be willing to lose whatever you put up. That's just the reality of trading in the markets. So if you're taking your savings that you need and you're going to put it in for the market to trade the market, then it could really work against you very quickly, and your emotional state's going to be really affected by what you're doing. Now, I still don't believe, and this thing kind of came up there. If it comes up again, I think I may add, and let's see what happens. Now, when I'm trading the Nasdaq, my own personal is that I'm willing to risk $500 on a trade. All right, so I'm going to go in there. And so now you see we have two contracts, and we're still flying. Now, what propels this market today? Well, let's say we got Tesla. So Tesla's going to do a stock split. They're jumping in and they're buying Tesla, which was down 50 this morning. Now it's up 100. So when you learn the market that you're trading, particularly like in the Nasdaq, understanding the stocks that are in there, what's making those stocks tick? Now you're building a picture for what's going to keep the Nasdaq at a certain level, what's going to let the Nasdaq drop, what propels it. So learn your market. Gold has one set of things, and indexes, or equity indexes, have an additional set of givens. Now I'm watching my pattern very carefully here, we see that it actually broke above that level, but I'll tell you what, let's see if I can do it this way. I can come down here. Yeah, I think I can. I can. So I'm going to come all the way up to here and reset this thing. Right there. There you go. So now I've moved it up to here. And now I'm looking, if it comes down and it refuses to break below 90, then I know we got to get out because it's going to go higher still. So let's see what happens. If it starts to break down, then I think I should be okay. If not, I got to really keep an eye on where it can go. So you see it dipped its little toe below it, and then it held it, and now it's moving back. These are all factors. You've got to stay focused. You've got to stay in tune. And if there's anything going on in your life, you're going to have to consider it as something that could distract you from your trading. That is something that will be discussed in our next webinar that I'll be participating in, and that is trading psychology. These all have a big part in what you do every day. And there are no magic signals. There are no magic wands that you can wave over the market and it's just going to go in the direction that you're determining for your trade. Now, here we are, we're sitting and we're waiting because we want to see essentially what's going to happen. I'm willing to allow this to go all the way up to that high, which is 99.50, before I would either reverse it, which I probably wouldn't because it should be fairly overbought by the time it gets up there. But again, we're just sitting, we're waiting. What I also use, excuse me, I live in San Francisco. We have tremendous amount of smoke in the city from the wildfires, and it really affects you. Makes me cough, and it squeezes my voice till it squeaks. All right, so what I've also like to use, or really do depend on quite often, number one would be Fibonacci levels. And in day trading, all of these, 0.236, 0.382, 0.5, 0.618, they're all important and make or break a trade. Now, if they're going to try to pop this, and again, you sit here and you look, it's like, why pop it? And then I look over and I'm like, well, what are they buying? Apple, Amazon, Google, Netflix, Nvidia, and Tesla. So is that really a manipulated market? I don't know, maybe, but the fact is it's really happening. Now, here we are. We're kind of getting close to that level. Now, I'm going to tell you that there are times you really do have to honor your stop. If you don't, you get in trouble. And the next thing, instead of being down 500, you're going to be down 1,000, 1,500. And you could blow out your account in a hot minute simply because you just like, oh, it's going to go down, it's going to go down. And I'm just going to let this run so that you can see. You saw how they went up there and did that, and then they come back down. And now look what they're doing. Now I'm seeing that some sellers are coming in. So honoring the stop or giving it just a tad more room, that is up to your discretion. Again, your account size is going to determine what you can and cannot do. And the last thing you want to do is to be blown out when you know you're right. So here we go. It starts to come down, then they stop. The Nasdaq is a very fickle market. You may choose that you don't want to trade it. The Nasdaq can pop and go down and go up at the blink of an eye. They're very much controlled by algorithms that are coming in with a basket of stocks to buy or a basket of stocks to sell. And so understanding that there are periods during the day when that is prevalent. we have the opening, and that's going to be just a mixed message because we've got all the buyers coming in, then we got the sellers coming in on those opening orders, and then right about after the first 30 minutes, then the markets, I think, start to determine direction, and that's going to be based on how these algorithms come in as buyers or sellers. So you can see how quick. Now we were basically almost down here, not down very much, and now suddenly we're pushing being down 500 again. This kind of, I don't really expect it to go way too much higher, but it can. It most certainly can. And so it's decision time all over. I don't feel like this market should go a whole lot more, and so I'm holding on to this trade. Again, it has to be an individual decision made during the day by each individual trader. How much risk are you willing to take? And what I may do is, as this approaches back up, I may add an additional contract because I feel that the market will drop back down. Now, as it gets up here, like at 11,402, 403, that's the high. That's the session high right now. But you can see right above all this, I've got a resistance level at 06. So I'm willing to let it go there, but I will definitively add another contract on a break there. So I'm going to add a contract at 0325. And basically, we've got this right here at 06. If 06 can't contain it, well, then we're going to go to probably what this level is showing me, 11, 411-ish. So now we're going to sit, and we're just going to see what this trade might do. Again, you're seeing the trades down 480, 440, 430, etc. dollars, and you can see how quickly those number changes. Right now, we're playing this market for $10 a tick, and there are four ticks to each dollar move. Now, if they start to bring this down, which I suspect that they should, I believe we should be able to make some money on the trade. But we're now going to have to wait. We're now entering into a period of time on the day where we do see sellers come in. Now, that's normally just based on when portfolio managers, hedge fund managers, et cetera, and then just other traders are coming in and they're putting in their orders for the day, and it could be on either side. But often, this particular time of the day is a period when sellers come into the market. If it's not and it reverses, then we're likely going to see the market try to go higher for the next 30 minutes or longer. But I'm going to hang on to what I normally see and see what we can get together. Again, what goes against this is the movement in Tesla, Netflix, Amazon, and Apple. As we know, Apple doing a 4-for-1 split, and that comes up at the end of the month. Tesla is doing a 5-for-1 split. That comes up at the end of the month. Tesla's being more pushed, and I think we've got a lot of portfolio managers, hedge fund managers who might have a position in Tesla. If they've been working a short position, they're going to want to cover that and then reestablish it maybe later if you still believe Tesla should go down. But right now, they're getting killed. They are getting killed because this stock continues to go to new all-time highs based on a split. Whether we think that this is a reality or not, okay, now I picked up another contract. Let's see what happens, because you can see how quickly this can work against you. Again, I'm trading in a sim account because I'm trying to demonstrate, and I'm trying to just talk about some different things that are absolute musts in a market. Now, whether my brain is telling me that these levels are way, way too high, the reality is telling me they're hitting them and they're not stopping. Why? Because they're continuing to buy Apple, they're continuing to buy Tesla for whatever the reasons are. So now we're sitting at levels that I don't think the market should be at, but they're not stopping. Okay, so here are my choices. I'm down a pretty good deal, but I have a large account. Okay, I'll add another. So whatever your contract size may be, we're averaging in. And let's see, okay, so now you're seeing, but I'm not really, this thing really has to come down before. So either you're gonna have to average in pretty heavily or you're gonna get killed. And that's today's lesson, how not to get killed. So when you, and now I'm gonna demonstrate or just show you where we went wrong on this trade. And I did allow it to happen so that I could show you. When you had this here, the minute it broke above that high, you should have been out and reversed. Now that told you, initially you saw it did, but then it came right back down. Now that's the market. That's how the market can react. And for all I know, it was everybody else getting stopped out here. It got pushed up. And then when they saw the sellers came back in, they got back in. Then they got to get back out right there on that push. So we've added contracts on our push because now the pattern itself is likely kind of to show me that we're getting a little bit overcooked and done. So depending on the size of your account, I'm going to begin to add additional contracts. Now my max contracts for this particular account would be 10. That's a lot of contracts. I want to tell you, and this is the mini. If you're trading the micros, much easier to manage. And the micros in the Nasdaq move just as quickly, but instead of $5 a tick, it's 50 cents a tick. So you're able to hang on to a position and allow a market to fulfill its goal or what it needs before it would turn if you're waiting for a turn. So, but what I need to do, you can see I'm still moving it up, but I'm still 12 points. Can the Nasdaq move 12 points in a quick second? It sure can. Move a whole lot more than 12 points in a quick second. So I don't worry about that level, but I may continue to add just to kind of, because I want to get my levels higher. But I'm going to hang out and wait. Again, let me just flip over. Let's take a peek at gold. Look at what gold did. We were expecting it to come up to here. And it did. That's where it got to. Now that was based on that level. So here we are here. I want to sit and I want to wait. I want to see, where am I going to sell? Well, I've got some moving averages here. Now, this is a 20, this is the 50, and this is the 200-day moving average on a 500-tick basis. Over here in gold, on a 5-minute basis, we have them truly, I've got Bollingers in there as well. Let me take my Bollinger Bands out so they're not confusing. Okay, so my Bollingers are out. And this is a four-day. This is an 8 moving at 4 moving average, 8 moving average. This is the 200, and here's the 50. Oh, excuse me. That's the 10. That's the 50. That's the 200. I got to remember my colors. And then what we have underneath this is VWAP. So I've got VWAP running in here, and you can look how much higher on gold it is above VWAP. It's kind of interesting, but I think gold should pull back. So I'm willing to sell right here and see what happens. So now we're running 2 positions. We're running a position in the Nasdaq, and we're running a position in gold. The Nasdaq is beginning to pull back, so we're okay with it. We're just going to sit and we're going to wait. We see gold is also beginning to pull back, And I think we should definitely maybe come down to about there. So I'm going to put my buy order in gold. And I need to put my stop in there. So if I'm wrong, I'm going to get stopped, and I know what my limitations are. But now I'm working because what I want to make is $200. I'm risking 100. So I got my risk reward ratio in place, 2 to 1. We're going to let that be and see what happens. Go over and take a look at the Nasdaq, which is working its way lower. But again, the buy interest in Tesla is very strong right now because it's on a different screen for me, which is why you necessarily can't, well, not necessarily, you can't see it. But that's where it sits. Now, unfortunately, I have so much information to pack in and only have 50 minutes, and we're quickly closing in. I want to open it up if anybody has a question. Let me open up that chat room. I'm not being able to open up the chat room. But that's okay. David will interrupt me if people are asking questions. Day trading can be very frustrating. Day trading can be very rewarding. It just truly depends on what your goals are, what your intraday goals are. Now, see, we made our target in gold. So I'm going to make sure that I go over and take that stop out because I certainly don't need to buy it up there. And let's see if Nasdaq will start to come down and help us out here. Doesn't look like it will. Let me see if I can get this back. Oh, nope. I want to put this on. I want to get it. No, that's not going to work. So let me go to here, go to here. Let's see if I can get this one back. No. I'm looking to try to recreate my fibs, but I'm going to have to go this route. So that's fine. Now I want to just go, let's try that again. I'm going to continue to expand my current fib retracement to see now we've got it sitting right at a support level, that 236, which basically can be very important in the terms of a larger move that's going on. Coming off of here, I can say 1, 2, 3, 4, 5. And if that's the case, I should get an A, B, C down. Not happening yet, but we're kind of moving into a time when the next set of buyers would be expected. And that would suggest that no matter where this market is, they're just going to start buying it because that's what the baskets will dictate. Baskets of stock that get entered, whether they're buying, if they're buying, 80 out of the 100, this thing's going to move and it's going to go up quickly and fast. If they're selling heavily, it's going to drop quickly and fast because it's the counter to what? If somebody's coming in to buy, there are a lot of people that have to sell it. And because that's the hedge. So keeping an eye on different things during your day is going to help you become a better day trader. I again want to repeat, I do not hold the golden key to day trading. I just have developed my own strategies, my own technique, and to how I will trade. And I think that's what every individual needs to do. Nobody, I've been trading for over 40 years. I have yet to meet somebody that can correctly tell me exactly their strategy produces 100% winners. Not every trade will be a winner. But the point to day trading is that you're going to use good risk-reward parameters so that your losers are cut short and your winners can go. Now, using multiple contracts helps you with that. We're set up, and once we would move into the money on this, then I would be more interested. I'm going to take one off. I'll take another one off. I'll start to scale them off as I scale them on. And that is really working your trade, managing your trade, working your trade. There are times, again, as you saw, that here we start to get our move. If they start to take it up, but I think and believe that we should continue to go lower, I will add. So maybe it gets down far enough, say it gets down to like here, I take one or two off, and then it rallies a little bit, I'm going to add the one or two back because I'm expecting the move to continue. I'm not getting indications that we're totally wrong. I think the market is fairly overcooked, and eventually the sellers are going to move in and they're going to whack these stocks because they're selling a basket of stocks. Tesla included, Apple included, Amazon included, and that propels our markets. Other thing to remember, you could be bullish, you could be bearish, but markets ebb and flow. I think it's very important to realize that if you're using your combination, you've got your moving averages. Here you can see they're both hooking lower, so that tells me to stay in the trade. And then I'm waiting for these. That's my next. I got support right here at 05, but if it breaks, it's going to break below a moving average. That should drop me back down to that level. Right there should drop me down to that level. But you see right now, they're holding this high level support. They're not breaking below. The feeling from others is that they're not giving up Tesla yet. They're not giving up Apple yet. So they're not willing to let this thing drop. They will continue to buy here in the hopes that they're going to make a break above 415, 416. This is how you think as a day trader. What do I believe the mark there? Now I found some sellers, but you're going to see they're quickly absorbed. I also use, you can see here, my cumulative delta. That's pretty helpful. That shows you the strength of the seller. If these sellers get really strong, oh, we're going to sit golden. We're ready. We're ready for it to drop. But at the same time, I'll tell you what, I think that we really should, if I was trading this, I don't think it should go really back above 13 before it drops stronger. So I'm going to put a stop there because it really shouldn't. If it does, I don't want to be in. I don't need to risk any more than that. And it's already going to be enough. It's likely going to be $1,000. No, it's going to be more than that. Yeah, it's about $1,000. So these are important things. What I use Elliott Wave. I use Fibonacci. I use Fibonacci Extensions all day long. They are important. It's a methodology that you need to study. You need to learn it. You need to learn the ins and outs and how to use it properly. If you're going to use Elliott Wave, you need to learn it. You know what the rules are. Know when that rule is broken, it's not what you think. It's going to turn into something else. So if you're in a trade, you need to get out of the trade. You need to either reverse the trade. You need to go with what the market is doing. Here's an important tip that I think every day trader should tell you. Do not fight the trend. And when you're trading on a 500 tick chart, that trend can change every 500 ticks, basically. And I trade on a 5-minute chart. And again, this is also kind of showing me, well, it's gold. Let me get back over to the Nasdaq. It's basically telling me that we're very overbought here. The delta's starting to show some weakness. The market now is being held at the 08 level. Goes a little bit above it, see if it comes back down. Well, they're lightening up a little bit on this stuff, but again, the baskets are coming in. There, I got taken out. And you can see Boom. That was a big hit. But what can I do here? I'll tell you what, we got a little bit of time left. Let's see if I can make back some money. It really should go. So I'm going to see. Let's see if we can make back some of this money. There we go. I will take this off. You see, I got $400 back. I'm going to let this pull back a little bit. If it continues to go, it needs to pull back. It's pretty overbought on a 5-minute basis, but my 500 ticks, oh, you got a little bit more room. So maybe we break to a new high, and these are all session highs, not all-time highs, but I actually don't have resistance, if I'm looking at my 5-minute chart on the Fibonacci basis, until 423, 424. So, tell you what, boom, let's give it a shot. Now, I don't want this thing to come down too far. Here we are, and if I can get something going here, then I'm going to probably put a stop in because I'm going to want to protect. But I think we get a little bit of a run. See, it's kind of waffles in, waffles out. Again, I'm already trading a 5-watt, so, you know, I don't have a whole lot that I can add if my max is 10. But we'll see what we can do here. We've got a few minutes left.
Hey, Michael, there's a question from the audience.
Yes, I will.
Michael,
do you have a question, David?
Yeah. Steve asks, why NinjaTrader? And do you have any other platform preferences?
I'm sorry, I actually did not hear you. Let me see. Oh, any other platform? Platforms that I use, yes. I use Thinkorswim, and then NinjaTrader. A lot of people use Sierra charts because they really like Sierra charts, and Sierra charts offers a lot. What you saw me put in there before is something else that truly is very important. And let's just kind of draw this line. This is
Michael,
volume.
your screen sharing turned off.
I'm sorry?
Your screen sharing turned off.
Oh, it did? Oops.
Yeah.
Oops. Let's see if I can get this back open again. I am so sorry about that, folks.
And just let me know you're almost out of time.
Is it back?
Yeah.
Okay. Okay, so now you can see this trade is working out. Let's see if I can get, oh, I can't. I want to get out. Come on, let me out. Please. We should. I really don't want to see it, but it could. Because we're just kind of getting waffly here. But I use NinjaTrader 8. There are a lot of tools you could put out. You really need to watch order flow. You need to watch how the deltas, that's the number, that's going to tell you the aggressiveness of buying or selling. And if they're just like big delta, big delta, big delta working down, then you know that we got a bunch of sellers and they're coming in, and that's going to change the trend. But right now that hasn't happened. We're right on the cusp. So you're kind of going to have to sit and wait. Now, on my Thinkorswim platform, it's because there is where I can watch the tick for both the broader market and for the Nasdaq and for the Russell. I can watch the individual stocks, which I can set up here, but I want a bigger chart, so I put it on a separate screen. Trading screens, I use NinjaTrader 8. I was devoted to Ninja 7, and I have a lot of things that run on Ninja 7, but I needed to switch to Ninja 8 because I needed to add some additional parameters to my trading screen, one of them being the volume profile, and also giving me, like right there, point of control. Point of control is important. Learn all about it. Learn about VWAP. Learn about value area high, value area low, point of control. These are important because they're quantitative numbers, and the markets are quantitatively traded right now. So these are things that you really need to put into your arsenal, and you need to learn how to use them. There are levels that you can put in that you need to know what happens if that level is broken. What happens if it is broken going down or going up? Do I buy it? Do I sell it? These are things, because you have to be able to trigger and trade as the other algorithms are trading. All trading now in this century and in this time are quantitatively generated, which means it's all numbers. You get to know the numbers, you're going to be a better trader. Questions, please feel free to email me, Michael at logicalsignals.com. Right now, I have thought about restarting a trade room. I have thought about putting out daily analysis and just producing a blog. But if I generate enough interest that people want it, then I would feel great about doing that. So I'm going to wrap it up because I got 3 minutes and the next person needs to do their sound check and get in here and get their charts all set up. I know I went fast. It's a lot of information to try and present in a short period of time. There's so much more to talk about. Again, if you have interest, I do offer coaching. I will start a trade room if I have enough interest, et cetera, et cetera. So if there's any interest out there, please send me an email. I have no problem. And I'm not, and please understand that the money that I make is through trading. I don't make a ton of money by offering a service like a trade room or other products. My money is trading and helping other people to trade, to learn how to do the skills that they need in order to be successful. There's nothing more satisfying than helping another trader or a group of traders become successful at what they're doing.